You've struck a bit of a nerve, Invesco has, with broadening out the triple Qs, the NASDAQ 100. You've got a whole family of products around the NASDAQ 100. Besides just covering that, you have the next gen NASDAQ 100, which is the, I guess, 101 to 200 largest non-financials in the NASDAQ. You've got a NASDAQ 100 ESG ETF and a next gen ESG ETF. It seems like the perfect storm here between demand for technology, which is the NASDAQ 100, and demand for ESG at the same time.
So, Bob, it's the first time that I hear struck a nerve and perfect storm in the same sentence together with QQQ, QQQ Gen, and Next Gen. So this is great. Yes, we did. We created an innovation suite for everything QQQ, everything NASDAQ 100. If you look at how technology has performed over the last 2 years, I don't think anybody would be surprised to hear that the QQQ went from $66 billion in assets in 19 to crossing $200 billion just a few weeks ago. Performance has been incredibly strong. The QQQ outperformed the S&P 500 11 years out of the last 13 years. So we have answered investor demand by creating an innovation suite. That includes the QQQ, obviously, our flagship product, QQQM. It also includes the Next Gen. So what's better than owning a Facebook? It's owning a Facebook before it becomes Facebook. So the next 100 companies by market cap, we believe, are going to provide the benefits for our investors. And to maintain optionality, we brought in the ESG versions of those indices, where performance is incredibly aligned with the mother index, so to speak, the Next Gen QQQ and the QQQ, but companies are rewarded for exhibiting good ESG behavior. So we do believe that the innovation suite is resonating with clients. QQQM and QQQJ have raised $4 billion combined over the last 12 months, and we do have a high confidence in the ESG versions as well.
So, Dave, here's the cynical question on ESG all the time. Is there really room for this continuing tidal wave of ESG? First off, you watch the flows very well. You're one of the great experts. Is there really capturing assets under management? We've got $800 billion coming into ETFs this year. Is ESG capturing a significant amount of that, number one? And number two, go ahead. Answer the question. I want to answer a follow-up.
I was going to say, it's capturing a little, right? So it's definitely been the strongest year for ESG we've seen in quite some time. By the time we get to the end of the year, I imagine will be something like 4 or 5% of the flows will have been into ESG-related products. Now, at the same time, we have just a flood of new products. So it's understandable that you're a little bit skeptical with the rash of new products here. But remember, a lot of these products are coming to market at the request of institutions that are making large allocations. Many of these launches this year have come out of the gate with big assets from institutions. So whether you as a retail investor are interested in these products is up to you. The institutional market, they're voting with their wallet.
Yeah, 4 to 5% of the inflows, given the PR that ESG is, I mean, it's incredible the amount of interest around this space. 4 to 5% is still pretty small. Let me ask you about the SEC. Gensler is getting a little nastier about this. He's made very pointed comments about, I want to know, and I want these people to justify exactly what is in this stuff, and I want to be able to better and more sharply define it. Do you think there could be some issues around what is ESG from the SEC in 2022?
I think this is pretty well-covered territory. I mean, you've got the UNPRI, which is a pretty exhaustive list of fundamental principles for ESG investing. It's understandable that regulators may want to be able to put some boundaries around marketing. That happens all the time. That there's all these rules now about what you can and can't put in the title of your fund. But I do think we'll probably see some regulation around, very light touch regulation around what you can and can't call ESG. I actually really prefer it when we actually get really specific with this stuff, whether it's a climate change thing, whether it's a specific social or governance angle. I think there's room in this market to not just have the big broad brushes, but a lot of building blocks as well.
Yeah, Anna, you get the last word here. Is ESG, the tidal wave, you still see it gathering assets under management, right? Do you see any regulatory issues for ESG in 2022?
I I don't see any regulatory issues. I think that this market is evolving and is maturing as we speak. We have seen how it played out in Europe, where today 81% of new flows into products went into sustainable products, ETFs or mutual funds. We think that the U.S. market is going to mature as well. I mean, to me, it's all about truth in advertisement. I like what they said about, not just painting broad stroke brushes, but being much more focused on what these products are all about. But as long as we continue to be truthful in the way we describe our strategies, I think we are going to be okay. I think this is a market that is going to continue to grow because it is attractive to the institutional audience and the retail audience today. So
Okay.
I see the U.S. following the same trend as Europe, just delayed by a little bit.